Inventory and services are one third of the basic business equation, which says we need something to sell, someone to sell it to, and the actual sales transaction. In fact, if we don't have products and services, we can never be in business. QuickBooks does have an inventory module, and one that works both easily and with enough flexibility and features that it supports fairly intensive inventory management needs. To work with it effectively, what you need to know is how to add products and services to QuickBooks, how to work with your vendor records, how to track ordering and receiving of inventory, how to make inventory adjustments, and on occasion, how to return items to vendors. It's also helpful to be able to know how to generate a variety of inventory reports. We know that businesses come in all shapes and sizes and serve a variety of markets and customer bases, but all businesses must have something to sell and someone to sell it to. The basic premise is that products or services have value, be it actual money, which is what most of us work with these days, or it could be barter for other goods and services that have value as well. We also need to make sure that someone is willing to buy them. That is what defines a business. Without the product, no transaction can possibly take place. Whether a business sells a physical product or service, which can also include something as innocuous or ambiguous as a concept or intellectual property, both products and services must be documented, tracked, and managed. If not, the business will be in chaos and unable to effectively process orders, and certain external stakeholders, like the IRS, tend to get a little cranky very quickly. Especially if you provide physical products, you must be able to document what you offer, what you have acquired, what you physically have on hand, and what you have sold. It doesn't matter if you buy finished items that you resell or purchase raw goods that you then manufacture into something that you sell. Otherwise, how would you know if you have anything to sell or if you need to reorder? To run efficiently, it's necessary to also know from whom you can acquire products, how long it takes to receive those products, and to monitor inventory so you don't run out. Without reselling or manufacturing your own, products must come from vendors. You and your company must manage vendor information so that you can maintain positive relationships with them. That includes not only communicating regarding the products that they offer, your specific orders and the processing and receipt thereof, but also ensuring timely payments are made to them as well. On occasion, you may need to return product to vendors. All of this product coming in and out must be accurately accounted for and tracked. A good place to start with all of this is with vendor records, because vendors are your supply chain. Vendor information stored in the vendor list is where the basic information, along with our terms for payment and other pertinent details, can be kept and managed. Products and services are then stored in an item list from which transactions can be created and inventory managed. This is what you use to enter, edit, and monitor your products and services in QuickBooks. Behind the scenes, the accounting part of QuickBooks utilizes something known as COGS, or cost of goods sold, as well as both expense and income accounts to track inventory and sales of goods and services. If you only provide services, no discussion about COGS or inventory is necessary. If you sell products but do not stock inventory items, then the discussion is greatly simplified. But if you stock and sell products, then you need to understand how QuickBooks tracks and manages it from procurement to sale or disposal. How do you know if you have inventory? Well, if you buy items to sell and keep them in stock instead of ordering on demand, then you have inventory. Purchases made for inventory, or the items needed to manufacture what you will eventually sell, are not simply entered as expenses, though. Inventory is considered a current asset. Current asset means that it is expected to be turned over within 12 months. The cost of what it takes to procure or manufacture an item is known as COGS. It is actually calculated by taking the value of the beginning inventory plus any net purchases minus any remaining ending inventory. One of the important KPIs or metrics for a business is calculating something known as gross profit, which is simply calculated by taking gross sales minus the cost of goods sold. Expenses for inventory, as well as the income from sales, are reflected throughout a lot of company financial statements. One of the reports in which inventory is specifically addressed is the income statement, which reports revenues, expenses, gains, losses, and net income during a specified period of time. It's also called a P&L or a profit and loss, and sometimes it's called a statement of operations. If purchases and sales are entered correctly, all of these calculations occur automatically and appear appropriately on reports. That process starts with tracking vendors and purchases of products and COGS related supplies. So, what about other types of accounts that QuickBooks uses? QuickBooks uses accounts to manage transaction information. They're really a way of just categorizing transactions and making sure that the accounting stays in balance. Now, we have to remember that double entry bookkeeping thing that says anything that credits one account has to debit another. When inventory or items used to manufacture goods you will sell are purchased, a variety of credits and debits occur in QuickBooks to record and then monitor that product through the business and sales process until they are sold or otherwise disposed of. COGS accounts store transactions specifically related to the procurement or manufacture of items that you will resell. This includes not only the actual cost, but possibly things like a bond that you have to take for a specific project or maybe a piece of equipment for a project as well. This is different than entering those traditional expenses like you would for general liability insurance or maybe a piece of equipment that will be used for various projects or through the life of your business. Now, I know it actually may all come out the same when we do the calculations in the end, but it's the middle that you need to be accurate with. In other words, if you make $10,000 and spent $3,500 on materials, $1,000 on a bond, $500 on a piece of equipment, and $150 in general office costs for administration, no matter where we enter those, the final net profit will be the same, $4,850. But the calculations we need in the middle, like gross profit and profit margin for specific jobs or items, is not calculated correctly. If attributed to expenses, just your standard expenses, the gross profit would be $10,000 and our margin would be 100%. If all of them were attributed to COGS except the overhead, then gross profit would be $5,000. Gross margin would be 50%, even though the net profit would still be the same. Can you see why using the proper accounts is important? Using COGS and expense accounts correctly helps ensure that you properly deduct those costs from your taxes, as well as ensuring that QuickBooks can correctly calculate things like COGS and gross profits. Of course, the yin to the expense account yang, or perhaps you prefer the chocolate to the expense account's peanut butter, are the income accounts. Yes, there are income accounts. Yes, they do have the same importance as the expense accounts, but they're covered in more detail in our chapter on making sales. For now, we are focusing on how to get products and services entered into QuickBooks so they can be ordered from vendors. And yes, we will ultimately sell them to customers, we hope. With accurate records of vendors and the products and services you plan to sell, and with them properly attributed to the correct types of accounts, your business will be set for success. It's simply impossible to have a business without managing this critical element. QuickBooks vendors and inventory capabilities will help you manage them as part of your daily activities and your overall business strategy.